Hello, good morning. It's Adil Fazal here, market analyst at cfds.com, bringing you a review of the FTSE 100 for the morning of Thursday, 12th of November 2015. Okay, interesting session, folks. First of all, let's bring out the fundamentals. As always, we commence with them. We have the Shanghai more or less flat, down 16 points overnight. We have the Hang Seng stellar rally, up 2.4%. If I just bring up the chart of the Shanghai and show you that we certainly seem to be struggling at this fib 75%, and obviously in the 200 MA as well on the Shanghai index. The actual Nikkei itself, we had the Nikkei up 6 points, basically flat. Again, all eyes on the Nikkei. I did explain to you that we are looking at that gap fill. The gap fill remains at 220,040. So certainly all eyes on gap fill. Bear that in mind, folks. And we are certainly going to be open to that in terms of the Nikkei moving higher. Now we have had Mr. Harada, or Horoda, I think. I can't. Forgive me for not pronouncing his name correctly. But he did mention that he had several dovish comments yesterday, and just like Mr. Draghi this morning. And basically intending on obviously reaching this 2% inflation goal or exceeding it, etc. And certainly remains dovish and supportive of the equity market itself. Okay, now the Hang Seng will certainly up stellar overnight, certainly pushed higher. In terms of emerging markets, we've certainly closed a gap and we are looking at potentially pushing higher in emerging markets as well. Okay, so bear that in mind. We have the commodity ETF. You do have an unfilled gap below in the CRBQ. So that's certainly something that we're going to remain open to, although there is support seen at this juncture here, which is at 30 levels. So certainly remain open to the CRBQ closing the gap below. And we are seeing copper prices hitting the lows again at $219. So that, again, certainly need to remain open to that as well. Okay, in terms of Asian markets, more or less flat, shall we say. Now the US markets are certainly under pressure overnight. The S&P 500 certainly got hit quite substantially, given the fact that it was almost at its highs at one point before it reversed. Now you can see here we hit a pivot high of 2086 and then we reversed the whole rally back down to that 2075. We're currently sitting 2072 on the futures, so certainly a potential support zone. Although having said that, we have put in a double bottom at 2070, so if we do go back and retest that again, it's not exactly a positive sign. The S&P 500 on the 60-minute chart has this H&S formation, so we have held that neckline and we've held the diagonal trend line lower, and lower lows, lower highs certainly seem to be the dominant theme. Now, the only issue I have with regards to the dominant theme being higher, lower lows and lower highs on the S&P 500 is the fact that we have obviously QE, mad central banks all over the world. So again, certainly remain open to any certainly powerful short squeezes are expected now, especially given the fact that we are coming into support on the commodities market as well. It's very hard to envisage this H&S playing out, especially given the fact that the Hang Seng was up by a stellar 2.4% overnight, and we have had further stimulus talk from China in terms of tax breaks, etc. So again, all equity market support is thus far. Now the dollar itself, the dollar index certainly seems to be making a potential top as well. This is something certainly to consider. We have put in a double top on the 60-minute chart. Any pop here will certainly see a potential low, and you are looking at gap fill below. So certainly remain open to that concept as well of a gap closing below at the 1.12120 level on the actual dollar itself. Now the daily chart certainly is bullish, given the fact that we have broken higher. We are retesting this breakout zone, and we'll see whether or not we can sustain this level. If not, then obviously you are looking at gap fill below, and previous resistance equals support in this zone at 12098 as well. Okay, so certainly remain open to that too. Okay, it's given the fact that obviously we've stated that the dollar is obviously now facing potential resistance, and having said that, there is another factor that I need to, or another variable that I need to show you as well. This is quite interesting. Bear with me. Bring up the 10-year and the 5-year note, even the 2-year note. Okay, so just save this. Bear with me. And this is the reason why the dollar is potentially putting in a top. Okay, so the 2-year note, you can see here we've put in a bottoming tail. Ever since then, we've certainly held, and we are holding these horizontal support levels on the daily chart. Again, if you go to the 5-year note, again bottoming tail, you've put in a bullish engulfing candle, and the 10-year nail again, we are trading inside consolidation and then looking for potential move higher. That obviously move higher in the bond market will certainly send the yields lower, and obviously given the inverse relationship, that would obviously cause the dollar to fall as well, and thereby inflating US markets potentially higher. So that's something to consider, especially given the fact that the commodities, certainly commodity markets, have been hurt the hardest. And if we can we can stabilize in terms of commodities. If I bring up the chart of copper, you can see here the daily chart, we are breaking below, so certainly very vulnerable to a sell-off and a weakness or further weakness on the price of copper. But if we can put a potential top in the dollar itself, then you are looking at commodities certainly moving higher again. Also with regards to gold, the gold price certainly has bounced off the lows. If I just bring up the daily chart, you can see here we are into horizontal support. So certainly an argument here that commodities start to move higher. Again, bring up the chart of oil. Okay, go back to your daily chart of oil. You can see oil is now into horizontal support at the $42 level. Currently trading at the 42.9. So again, this horizontal support, the probability of that holding is much higher. Okay, is much higher. Now, in terms of Glencore, the FTSE itself, Glencore has closed the gap. So therefore, you are looking at gap fill support on Glencore, given the fact that obviously copper is testing the lows, and there is a higher probability that the FTSE 100 certainly will start to move higher from here, especially given the fact that emerging markets are into support. Okie dokie, right? Okay, that's the summation in terms of fundamentals. Now, the economic data yesterday, we actually seen the real wages fall. Unemployment obviously hit the lowest level, so that certainly was supportive, although real wages is a concern. But having said that, if you have weak real wages, that means that inflation will remain weak, and therefore the BOE is on hold further, and therefore that's considered to be dovish, and that's obviously equity market supportive. So certainly take that into consideration too. Now, industrial production data has just come out, so we have had inflation in German inflation and French inflation this morning, basically tepid or weaker, came in line. We've had Mr. Draghi obviously dovish with his rhetoric this morning, so that's obviously equity or European equity market supportive, given the fact that the euro obviously is retesting those lows at around the 1.07 level. Now, we have had industrial production that was actually weaker than expected. Well, actually not weaker than expected. It came out better than expected. Year on year and month on month. The month on month figure was expected to come out at minus 0.5. It came in at minus 0.3. So certainly equity market supportive as well. Okay. Now, the FTSE from a technical point of view, now that I've shown you the other variables in this market, now let's have a look at the actual market itself. Okay, so the volatility index is certainly coming back into resistance now. The IHS obviously failed because we dipped below. Okay, and the volatility index now currently, you are coming back into horizontal resistance, and therefore that will be supportive of the FTSE itself. Okay, now in terms of the earnings news this morning, we've had a barrage of weakness. We've had Rollys Royce obviously with cut its dividend and obviously forecasts as well. Burberry, Punch Tavern, SAB Miller, BAE. We've had Repsol and First Group. So numerous companies all cutting guidance and forecasts, and obviously profit warnings as well. So certainly negative. Now, has that negative news now all been factored into the FTSE? Now, given the fact that the volatility index is now back into resistance, that certainly is the case. Okay, now the FTSE 100, let's bring up the daily chart and look at the potential scenarios. Now, the FTSE 100 is now back into this key testing zone. The key testing zone being the 6240 level, okay, on the daily chart. The weekly chart on the FTSE 100, obviously we already know, we've retested a neckline and certainly indicating weakness on the FTSE itself. Now, the 60-minute chart of the FTSE 100, you can see here we had a bottoming tail, we rallied, and that rally obviously has subsequently failed, and the FTSE 100 now is retesting these lows at the 6250 level. Okay, and that certainly should be interesting to see whether or not we can sustain these lows and hold these lows on the FTSE. Given the fact that we've got weaker earnings, the question is, has that been factored in? Now, the FTSE on the 10-minute chart we'll be able to show you in terms of its opening and closing. We opened at the 6280, 6290 level, obviously sold off quite substantially, and the market hit a pivot low of 6250 before it started to bounce again. We went and tested the 6300 level, and obviously we've sold off subsequently ever since. Now, the FTSE again, 6250 is absolutely crucial and absolutely key now in terms of holding support on the market itself. If that were to crack, then you are looking at obviously new lows. and new lows in the FTSE would then cause a major sell-off down to the 6170 level. That's correct. Okay, so certainly bear that in mind in terms of trading the FTSE 100. Okay, now the 10-minute chart again is certainly showing you or indicating support at 6250. If that were to crack, then you are looking at a weakness itself. Now let's have a look at the actual sector by sector. Look at the retail sector first of all in terms of Burberry. Burberry is certainly hurting the retail sector. You are seeing potential support here on the retail sector. If that were to go, then you have support at 345, and that's going to be key in terms of holding the FTSE 100 higher. In terms of looking at the banking sector itself, banking sector certainly remains strong on the 60-minute chart and on the daily chart as well. You are looking at potential support. The pharmaceutical sector certainly is under pressure this morning, quite substantially under pressure, and you are coming back and retesting previous resistance equal support in the pharmaceutical sector. The telecom sector itself today certainly has put in a potential pivot top in the interim. As you can see there on the 60-minute chart, you've put in a potential double top. On the 10-minute chart as well, at intraday double top at 634. 60-minute chart certainly is indicating exhaustion and it is indicating weakness. Daily chart, again, you are looking at horizontal resistance. The retail, we've seen the mining sector. The mining sector, again, given the fact that copper prices are testing those lows at $219, you are looking at certain weakness on the price of the mining's index. You are looking at potential support, gap fill support further lower at 296. So again, that's going to be interesting to observe. The daily chart certainly has sold off quite substantially. Now, if you take out use a fib retracement tool to the fib to the high, and you've even exceeded 75%. So certainly a negative move thus far. Oil and gas again is into resistance, although having said that, previous resistance equals support. So therefore you are looking at potential bounce or potential move higher here. Again, all eyes on the dollar index itself and whether or not it can start to move higher and sustain a move higher. The beverages sector, again, given the fact that SAB certainly posted weakness, you are looking at a potential double top on the 10-minute chart. You did have a thrust higher and that certainly has run out of steam. Again, any pullback will be seen. Your previous resistance equals support, so keep an observation there. The insurance sector, again, potential support for now, and you are looking at 646. Obviously, previous resistance equals support as well. On the 60-minute chart, you are looking to potentially thrust higher, and on the daily chart, you are looking at potential support here in this zone too. Okay, so these are all the sector breakdowns of the FTSE 100. Ultimately, it's all about the price of copper holding support. It's the price of gold that certainly has held support thus far, and obviously the price of oil holding support at this $42 range. If we can hold support here, then we are looking at a potential thrust and a move higher on the FTSE 100 itself. Again, all eyes on that 6250 support level. We can cross verify the support of FTSE on the FTSE All Share. Again, FTSE All Share is into horizontal support on the daily chart. Euro Top 100 again is meandering and certainly is holding support on the Euro Top FTSE 100. FTSE Europe itself certainly is weak on the daily chart. 60-minute chart itself, you are looking at gap fill support further below, so that certainly should help the FTSE itself. The FTSE 250 certainly is looking weak on the daily chart, although the 60-minute chart you are into horizontal support on the FTSE 250. So interesting scenario. It's all about commodities now. All eyes on commodities. Weaker earnings. The question is, have they been factored in? That's the key question at this junction. Now, given the fact that the Hang Seng was up by 2.4%, okay, given the fact that Mr. Draghi certainly has maintained his QE euphoria speech, it's very hard to see a real breakdown on the FTSE 100. But again, given the fact that we have had weaker earnings, price action will dictate, and price action will certainly tell. Let me just bring up the defence sector of the FTSE. That's one thing I haven't done. 1 second. That's one area that I haven't seen. 1 second. FTSE defence. There you go. Aerospace and FTSE 350. Okay, this is a sector that we need to see in terms of Rollys Royce basically weakness. Okay, daily chart certainly very, very weak on the daily chart. The weekly chart itself certainly is indicating weakness here. Okay, so you do have support here at this region here. You have previous resistance equals support as well. So certainly some support on the weekly chart, but certainly a very ugly looking chart from my perspective. Well, given the fact, having said that, I mean, it certainly seems to be factored into a large extent now as well, given the fact that the trend was already down and was quite bearish regardless. Now you do obviously have support here in terms of the British, the aerospace and defence sector. So certainly keeping an eye on that. Be very close to a very keen eye on that, and we'll see whether or not this weakness remains on the aerospace. So again, that's certainly another index to watch in terms of going forward, in terms of observing the FTSE 100, especially given today's move in Rolls Royce. Again, it's going to be very interesting to observe. Again, it's all about 6250, folks. It's, from my perspective, 6250 and 2070 on the S&P 500, and that will dictate the movement and sentiment in the market. Next, European equities, I'm going to just make a video on that, and I'll explain and elaborate the potential moves there. Okay, I think that's a wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.